Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour. The International Monetary Fund cuts global growth forecast for this year by 60 basis points to 2.8%, says the prospects for growth in the medium term look dimmer than before. Also hands a small cut to India's growth forecast for FY24, taking it to 5.9%. The Indian Met Department predicts a normal monsoon this year, contradicting SkyMet's prediction of a below-normal monsoon. Both forecasters agree El Nino-like conditions are likely, but the government believes it will not have an adverse impact on the monsoon. The Emergency Credit Guarantee Scheme, launched at the start of the pandemic, draws to a close. Nearly 3 lakh crore rupees were disbursed to small businesses. NPA ratio was at 4.38%, which the government says is better than expected. SEBI clamps down on instances where investors may be charged twice to invest in alternative investment funds, says investments that come through an intermediary which charges for the service should be onboarded only through a direct plan. Also imposes strict rules, capping fees and charges that an AIF can levy. Bandhan Group and IIFL are jointly looking to acquire Aegon Life Insurance. Sources say the move will pave the way for an indirect entry into the life insurance market. That's an exclusive. After a strong performance in 2022, Mercedes-Benz starts the first quarter of the new year with nearly 4,700 deliveries. Launches a new AMG flagship model, calling it the most powerful car to be launched in India yet. Bombay High Court seeks government's response on the need to amend IT rules to fact-check social media posts. A petition filed by comedian Kunal Kamra says rules are manifestly arbitrary and the government is acting as a judge and prosecutor in its own cause. Amul finds itself at the centre of battleground Karnataka. Its foray into Bengaluru and the state has sparked protests and fear over the future of Karnataka's homegrown brand Nandini. A special report coming up. Let's start with the market action first. Stocks on Dalal Street gained for the 7th straight session to end at the highest level in a month. Nifty and Sensex gained 0.5%. Financial stocks led the rally. In the commodity market, oil prices remained steady on expectations of a potential economic stimulus from China, healthy demand in the rest of Asia, and a drop in US crude stockpile. Brent remained around the $85 a barrel mark. Bitcoin rose above the $30,000 mark for the first time since June last year. This as investors expect the US Fed to end its aggressive monetary tightening campaign soon. The major cryptocurrency gained 8% over the last 4 days. Bitcoin is up 80% this year, while Ether saw gains of 60% in the same period. The top story this evening now. The International Monetary Fund has cut its global growth forecast and issued a dire warning over the medium-term growth prospects. After handing a cut to global growth outlook in 2023, the IMF has warned of low growth for at least half a decade. India's growth forecast has also been trimmed for this financial year and the next financial year. Ritu Singh is here with more on the IMF forecast and the commentary. Ritu, what does the IMF report say?
The IMF has handed a sharp cut to India's growth forecast in its latest World Economic Outlook report, both for the current and the next fiscal. For FY24, IMF has forecast India's growth rate at 5.9%, which is 20 basis points lower compared to the January forecast and much lower than RBI's estimate of 6.5%. Thereafter, India's growth is seen picking up to 6.3% in FY25, but this too is about 50 basis points lower compared to the previous forecast. The fund estimates that India's inflation is going to average 4.9% in this fiscal and 4.4% in the next, which is a tad more optimistic than RBI's projections. On the global front, IMF says prospects for growth now seem dimmer than in decades, and any tentative signs in early this year that the world economy could achieve a soft landing have receded amid stubbornly high inflation and the recent financial sector turmoil. IMF's baseline forecast, which assumes that the financial sector stresses are contained, is for global growth to fall from 3.4% last year to 2.8% this year, before rising slowly and settling at 3% 5 years out, which is the lowest medium-term forecast in decades. In fact, the risk of global growth falling below 2% this year, a low growth outcome which has only happened 5 times since 1970, remains elevated at about 25% chances. Now, IMF warns uncertainty is high and a hard landing, especially for advanced economies, has become a much larger risk. Many economies are likely to experience slower growth in incomes this year, and the world economy is not currently expected to return over the medium term to the rate of growth which prevailed before the pandemic. A quick word on inflation as well, which is high but starting to decline. The baseline forecast is for global headline inflation to fall from 8.7% last year to 7% this year and 4.9% by 2024.
Thanks, Ritu, for joining us. Moving on to a CNBC TV18 exclusive now. The Sun has set on the emergency credit line guarantee scheme that was introduced to help small and medium-scale businesses at the start of the pandemic. Governments also say the scheme, which ended on the 31st of March, saw disbursals worth nearly 3 lakh crore rupees as against total outlay of 5 lakh crore. The big takeaway is that only 4% of the disbursals turned NPA, which the government says is better than expected. Sapna Das is gathering the story. She joins us with this exclusive. Sapna, what more are you picking up?
Well, first of all, the feedback from the banks and various stakeholders has been pretty solid as far as the ECLGS is concerned. So despite the sunsetting on March 31, no further sanctions on that. If you look at the progress, that has not been bad at all. So that's one. Second, also this question is being asked that why has the government agreed not to extend it further? The finance minister in her budget last year itself had indicated very clearly that 31st March 2023 will be the time when the ECLGS will come to a conclusion. And plus, if you look at the traction that the scheme has received for the last few months, that has progressively tapered off once the COVID-led emergency came to an end. Post the Omicron wave, if you look at the number of fresh sanctioning under the ECLGS, that has really tapered off. And finally, the government has decided to end it. A quick look at the numbers, 3.73 lakh odd crore was the total amount sanctioned against a corpus of 5 lakh odd crore, out of which the guarantees itself are 3.65 lakh crore. So all of this is over 70% of the corpus. And in terms of disbursements, as you rightly indicated, around 3 lakh odd crore. The numbers are pretty solid on that front. Interestingly enough, out of the guarantees given, the 3.65 lakh crore number that we're talking about, the NPA ratio is quite manageable as per government sources. 4.38% is what we're looking at. So in absolute terms, it would be just 16,000 crores out of that 3.65 lakh crore, which the government guarantee stands for. That's one. Second, also in terms of accounts, around 15% of the total borrower accounts, so 1.19 crore are the number of people who came under the ECLGS, and close to 1 crore actually got the loans disbursed for themselves. So out of that big number that we're talking about, around 15% are NPAs, which would be around 18 lakh odd accounts. So these are the statistics as of now. Going forward, maybe there could be further updates, and we'll bring that out.
Right. Thanks very much, Sapna, for joining us with that big exclusive. And Sapna will be tracking this big story for us. Moving on now, all eyes are on the weather outlook. Yes, the Met Department has predicted a normal monsoon this year. According to officials, rains during the June to September period is expected to be at 96% of the long-term average. However, yesterday, private weather forecaster SkyMet predicted that the upcoming monsoon will be below normal. Manisha Gupta is here with more on the differing forecasts.
Well, thank you for that. Well, yes, contrasting forecasts from the government and SkyMet, but they do agree on few things as well. Firstly, Met Department is predicting rainfall to be 96% of the LPA. SkyMet has a forecast of 94%. So anything between 96 to 104% is considered normal rainfall. So even the government's forecast is at the lower end of what is considered normal rainfall.
We come out with the statistics, and result is about 96% of 87 centimeter will be there. Roughly about 83.5 centimeter rainfall will occur during June to September.
We expect that monsoon will be 94% of long period average, that is 8.6 mm. And El Nino will be evolving, and it will be much stronger in second half of monsoon.
So if the government's prediction comes true, this will be the 5th consecutive year of normal monsoon. It was in 2018 when India saw deficient rainfall at just about 91% of the LPA. However, there are several key factors that can have an impact. Both government and SkyMet agree that El Nino-like conditions are likely. Government believes that El Nino is likely in the second half of the year and it will not have an adverse impact on the rainfall. Actually, from 1951 to 2022, the El Nino phenomenon was observed in 15 years. And out of these 15 years, we have had normal rainfall in 6 years. So an El Nino does not necessarily mean a deficient rainfall. Another point to note is the spatial distribution of rainfall. For example, last year we saw monsoon at 106%. It was above normal. The month of July in last year saw the highest rainfall in nearly 17 years. But despite this, rainfall in India's eastern and northeastern regions was 12% below normal. In UP and Bihar, it was 30% below normal. And let me conclude by explaining why rainfall is so significant to India. The kharif crops like rice, cotton, maize, soybean, corn and many more are heavily reliant on monsoon. In fact, kharif crops account for nearly half of India's agri-basket. So normal monsoon is absolutely essential for the agri sector and economy at large.
All right. Thank you very much, Manisha, for joining us. The U.S. banking crisis is not over. That's the word coming in from noted economist Norail Rubini. Speaking exclusively to Lata Venkatesh, Rubini said that he expects more trouble for financial institutions in the U.S. He also believes that India, along with a few other emerging markets, will be a safe bet for investors to park their investments.
I don't think it's over. I think there'll be more financial institutions going to be in trouble. And recently, the problems of the banks have come from what is referred to as market or duration risk, meaning having long-term securities whose value is falling as interest rates are going higher. But we're going to go from market risk to credit risk because now there is a beginning of a credit crunch in the banking system, especially the regional banks that lend money to households. Suppose that the new normal is 6% inflation, then 10-year treasury yields, they'll have to go eventually to 8%, 6% for inflation and 2% real. Now they're at 3.5%. If they go from 3.5% to 8%, you have another 50% losses on what is supposed to be a safe, secure, and defensive assets, trillions of dollars of dollar treasuries or EM debt linked to the dollar or of high yield and high grade bonds. So the risk of significant losses, both in bond markets and even in credit markets, are significant. Structural factors for India go in the favor of India. Potential growth around 7%, maybe higher with more economic reform, a young and growing population, a catch-up of per capita income because it's much lower than China. So India is going to be a rising power in the next few years and decades with additional economic reforms. So certainly India and a few other emerging markets might be a good place to invest, both for fixed income and even in the equity markets.
Right, and you can catch that entire special conversation on Indianomics at 10:30 p.m. only on CNBC-TV18. Moving now, a quick look at other headlines. Market regulator SEBI has asked alternative investment funds to provide investors the option of a direct plan. This will allow investors to participate in an AIF without having to pay a distribution fee. SEBI, in a way, has rationalized the fee model similar to what it did in the case of mutual funds. A new deal is brewing in the insurance space. Bandhan Group and IIFL Group are looking to jointly enter the life insurance business. Sources have told CNBC-TV18 that the entities are in talks to acquire Egon Life Insurance to mark their foray into the sector. The embedded value of Egon Life Insurance is around 430 to 450 crore rupees, and the transaction is expected to happen at or slightly below the embedded value. The Supreme Court has granted permission to Vedanta to carry out maintenance work at its closed sterilite plant in Tuticorin, Tamil Nadu. The decision was made based on a report of a high-powered committee by the Tamil Nadu government to inspect the structural and safety of the plant. After registering its best financial year in 2022 with a jump of 37% in sales, Mercedes-Benz continued its performance in Q1 2023 with 4,697 new deliveries. The company today launched the AMG GT63 SE Performance, priced at rupees 3.3 crore. Here's our colleague Danish Anand reporting.
Mercedes-Benz first PHEV, the AMG GT63 SE Performance, has been launched in India. This is the second AMG that has been launched this year, and the price starts from rupees 3.30 crore. The company is calling this the most powerful car to be launched in India, which is inspired from the Mercedes F1 technology.
For us, this is for the true blue enthusiast who like to drive on tracks. It's a 4-door coupe, so it's also functional. You can go for parties in the evenings. You can use this car. So I think it's our responsibility to continue to excite this segment with newer products, and AMG GT63 is one step in that direction. From a macroeconomic side, we see a good order bank right now. We had the best ever quarter coming in, and we are still confident of a double-digit growth for the rest of the year.
Mercedes-Benz India had a great year in terms of sales and revenue last year and hopes to improve the performance this year as well. The company will be launching 10 cars in India this year, out of which 2 have already been launched.
8 in the pipeline. Out of the 10 cars, 50% of them will be in the top-end vehicle segment, the balance in the other portfolio.
Mercedes is seeing a huge demand for the cars over the 1 crore price bracket, and this segment grew by over 100% last year. The company hopes that even this year, this segment will perform really well, and the company hopes to clear the pending deliveries that it has. With video journalist Gaurav Tyagi, this is Danish Anand for CNBC-TV18.
And we're going to The Bombay High Court asked the centre to file an affidavit on the new IT rules. This after stand-up comedian Kunal Kamra filed a plea challenging the amendments that allow the government to fact-check social media posts about itself. Content identified as fake or false would have to be pulled down. This has led to concerns. The Editors Guild has said it is disturbed by the amendment, which deeply impacts press freedom. The News Broadcasters and Digital Association says this gives the government power to designate the fact-checking unit as the adjudicator of truth. The government has assured that the move is aimed solely at safeguarding citizens and there are no sweeping or draconian powers.
Today's PIB fact-checking inclusion in the rules is a continuation of what we did in October 2022, where we put down a very clear rule under 31B5, where misinformation and patently false information, it is an obligation of the intermediary to not host that type of content. And so today what we have said is to help those intermediaries who say, how do we determine what is patently false or what is misinformation? What do we do? How do we do this? We have said in the context of government information, there will be this fact-checking unit that will tell you what is right and wrong. And it's certainly up to you to go by their fact-check.
I'm clear that this is unconstitutional. It violates 19(1)(a) clearly. It goes directly against the Shreya Singhal versus judgment of the Supreme Court of India. And I think they should be given short shrift. But if this is allowed, then I think news providers will also be hit. Certainly, the Hindu was not consulted, nor any organization, any media organization I know about.
This allows the government to do is fact check, which is an irony because effectively the media is supposed to fact check the government. In this case, the government can choose to fact check, let's say, articles from the Hindu which are on social media and say that and tell social media platforms to take it down. No platform will survive the liability and will take the risk of going against a government order. The IT Act itself does not allow the government to make such rules.
Piecemeal extensions, it made it very hard for stakeholders to engage meaningfully with the consultation process. At the time of the consultation, it was also said that there will be a subsequent meeting with stakeholders, etc. But as we saw, the Editors Guild of India in their statement have noted that it doesn't seem like any meaningful conversation or any consultation happened. So there have been constant concerns on that front.
All right, you can catch the full conversation with N. Ram, director of the Hindu Publishing Group, Nikhil Pava, founder of Medianama, and Prateek Vagre, policy director at Internet Freedom Foundation at 9:30 p.m. right here on CNBC. With elections round the corner, Karnataka has become a battleground, but it's Gujarat-based dairy cooperative Amul that finds itself caught in the crossfire. Amul's plans for the Bangalore market have been interpreted as an attack on the state's homegrown dairy brand Nandini. But CNBC-TV18's Shilpa Ranipeta reports that Amul is unlikely to topple Nandini's dominance in the state.
This is not an isolated incident, but part of an agitation that has spread to numerous pockets of Karnataka. It started with a tweet by Amul, the dairy brand of the Gujarat Cooperative Milk Marketing Federation, announcing the launch of a few of its products in Bengaluru. This has turned into a political slugfest in Polban, Karnataka, with the opposition portraying this as an attempt to destroy the 21,000 crore rupee Nandini brand that belongs to the Karnataka Milk Federation.
There are attempts to finish KMF. I am saying be aware. Nandini brand is no less than Amul. We stand at second place in the nation.
Nandini brand ideyalla Amulgiಂತ ಏನು ಕಡಿಮೆ ಇಲ್ಲ. ತೀರಾ ನಿಲ್ಲಿಸಿ ಅಂತ ನಾನು ಹೇಳೋದಿಲ್ಲ. ಮುಕ್ತ ಮಾರುಕಟ್ಟೆ ಸರಿ.
I am not asking you to completely stop it. I do agree it's an open market, but we must save our farmers. Let there be Amul, but you must save our farmers.
ಸದ್ಯಕ್ಕೆ ಫಸ್ಟ್ ನಿಮ್ಮ ಮನೆ ರೈತರನ್ನ ನಿಮಗೋಸ್ಕರ ಇಲ್ಲಿ ಬಡದಾಡ್ತಾ ಇರೋ ರೈತರನ್ನ.
The opposition alleges that Amul's entry could distort the dairy market in Karnataka, make Nandini's products less competitive, and eventually impact the livelihoods of over 24 lakh dairy farmers in the state.
भाई हमारा नंदिनी ब्रांड है कर्नाटक का जबरदस्त है ये चुप्पी इलेक्शन के टाइम पे ये राजनीति कांग्रेस और जेडीएस कर रहे हैं इस बातों में कुछ मतलब नहीं है
So how much of a threat is Amul to Nandini? The Karnataka Milk Federation comprises 14 milk unions, 24 lakh dairy farmers and produces over 90 lakh litres of milk a day. Amul, meanwhile, comprises 18 milk unions, over 36 lakh dairy farmers and produces more than 264 lakh litres of milk a day. At the national level, Amul is the largest with annual revenues of over 55,000 crores, while Nandini, ranked number 2, claims revenues of 21,000 crore rupees. Both brands already work together in some parts of Karnataka, with Amul producing ice cream at Nandini's factories and procuring milk from Nandini for some of its products.
There is nothing like Amul versus Nandini. It's always been Amul and Nandini because we are both cooperatives. We are both owned by the farmers of our respective states and we've been working together for decades. Now this has been construed as Amul coming to hurt Nandini and it will not hurt Nandini in any way.
Neither is this Amul's first foray into the state. Its butter, ghee, ice cream and other products have been available in Karnataka for years. Amul adds that its latest plans are just an e-commerce launch of premium products like Amul Taza, Amul Gold and Amul Dahi aimed at Bengaluru's cosmopolitan consumer. Experts also point out that Nandini's products cost a lot less than Amul's, partly because of a 5 rupees per litre subsidy Nandini gets for its milk from Karnataka government. So using competitive pricing to capture Nandini's market share will not work for Amul as a long-term strategy. In Mumbai, Shilpa Ranipeta.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.